Bitcoin mining economics are entering a new phase. In today's episode, we are joined by Valentin Rousseau, Hashlabs financial analyst. He tracks very many metrics and makes some very interesting predictions on the Bitcoin price, global hash rate, and transaction fees. Today we will break down his predictions, and he will also reveal what are the most important metrics that he uses day by day to track mining economics. Let's get into it. Hello Valentin, welcome to the Hashlabs podcast.
Thanks for having me, sir.
So, can you give a brief introduction of yourself?
Yeah, sure. I'm the lead analyst, financial analyst at Hashlabs, and previously I worked at Cambridge on the last mining research report that was released in last February, and now I'm heading into a new research project for Hashlabs, and it will be a country per country analysis and cover the world, and I'm really excited to share this to the mining audience.
Thank you for the intro. So for all the listeners here, I know Valentin as one of the best analysts in the Bitcoin mining space, and when it comes to the financial side, I really think he's the very best. He is very diligently tracking metrics on mining and building a huge database that gives him enormous insights into the market. So, Valentin, as the first question, what exactly do you track in the mining market today? What is your focus areas?
Yeah, what I'm tracking currently is actually normal, I would say, or standard metrics, rate, Bitcoin price, derived hash price, and the transaction fees. Now, if we want to deep dive deeper into, I would say not the unknown, but something that is not so much disclosed, it's looking at all the hash cost and the capacity. I'm talking about public miners right now, the capacity to, for instance, cut the SDNA, the ability of having cut the SDNA by over the past years. Since 2024, we have seen that despite the Bitcoin price resurgence at this moment, there was a push to cut SDNA expenses, and that really materialized during 2025 as the halving was happening, and also a bit of BTC price decline. So it's really important on this side, and I would also add some metrics that are sometimes available on investor presentations, and not so much on financial statement reports. So for the audience, you should look at the investor presentation if you want metrics such as uptime. Uptime is a key metric, and particularly if you want to assess the ability of an operation to be sustainable, specifically when they have no access to demand response programs, credits, and in a sense rewards to curtail, and when they are simply forced to shut down. It proves that indeed Bitcoin mining is a great tool for grid balancing, simply for grid balancing. But by contrast, you should be aware of the fact that those kind of mining operations are kind of inefficient or not as efficient as other operations. So yeah, it's really about uptime and SDNA specifically, and all the hash cost layers that might exist. Add a last thing that I've covered in a recent research article for Hashlabs. I looked into the Bitcoin they were mined, the value of this Bitcoin mined per shares, and I also included additional shares to cover the electricity cost, meaning that electricity costs were assumed to cover the electricity cost by equity issuance. And looking at this, I made a comparison between the stock price and the Bitcoin price value per share. While there are caveats within this analysis that are disclosed within the articles and all the limits, it's a really interesting use case to see over the past years what, in this case, public miners, or which public miners have been profitable at mining, and whether or not mining is a profitable industry.
So we will dive deeper into your research later in the episode. But first, it would be great for listeners to know what is your background, how you got into mining analysis, and what exactly led you to focus on the public miners and this kind of quantitative metrics in your research.
The first thing is that I've firstly been at Block Green, but before that, I've been really digging into financial statements of public miners, and it was all of this starting in 2022 during the collapse of FTX and the crypto winter. So not the best moment to enter the market, but in the meantime, it proves that you are really interested by the fundamentals and not only by the stock price. Regarding the second question, public miners are actually important as a way to use a proxy to understand the market. This is particularly significant even if they have access to a higher level of capital, because they are really the grassroots to understand how the market evolves. And what it's really important to stress is that I would say that on average, in an upside moment, in a bullish moment in the market, public miners are this tendency to burn cash much more than private miners because of greater access to capital. So it also gives a perspective that the maximum, I would say, roof and room of maneuvers for miners, and also in the meantime, what is the bottom level at which you can operate or not, and this gives a range in many scenarios where you can assess the current state of the market.
So looking at overall mining economics right now, how healthy are the mining margins, and what is going on in the mining market regarding the economical side?
It depends on a lot, but I would say that we are close to $30 or $27 petahash, a dollar per petahash in terms of hash cost. The hash price is as of today 38, was close to 40 after the slight Bitcoin price recover. But the mining margins are below their, I would say, historical level, where was close to 40%, 35 to 40%, and I'm talking about self-mining, obviously, and we are closer to the 10 to 50% range as of today, but strictly by looking at the industry median per cost, which is $40. Its direct cost all in is 55 dollar per megawatt hour, obviously. But yeah, the margins have been cut by almost two. And the issue within that is that obviously we cannot control the Bitcoin price, and the transaction fees also have been really low and not going to rise for the moment. There is no clear sign that there will be a recovery in the transaction fees, because it's really tied to the current usage and the current integration of Bitcoin in the financial world, in institutions, and not in the country base. Now, if we look at a kind of forecast and are looking at gross margins, this was an aggressive forecast, but I think the hash rate might go 1.7 exahash if there is a price recovery at K dollar per Bitcoin. So maybe in the future we could land between, again, 30 to 40% even with a price recovery. And so this signals that actually the hash rate is an exponential measure, even if it will slow down with the efficiency slowdown. But what we have seen so far is a single digit efficiency released by Bitmain, so that's explained this forecast as well.
Yeah, so for those who not watch this on YouTube, listen on some platforms, what we're showing on the screen now is a chart of Valentin's projection for gross margin in 2026 in percentage. And you mentioned that you believe that hash rate could reach 1.7 zettahash or 1700 exahash if the Bitcoin price reaches $150,000. Is that by the end of 2026?
Yeah, absolutely. It's by the end of 2026.
Okay. And do you think the hash rate could theoretically increase more than that, or would that be impossible? Because there are some physical barriers as well here.
Yeah, actually it could. And at the moment, the physical barriers we have do not prevent us to see the market rise above, up to, I would say, up to 2 zettahash. Why? Because at this moment, we have power capacity that is still relying on other ASICs, even if we don't know precisely how much, what is the share of ASICs running on 30 joule per terahash. Yeah, 30 joule per terahash. We know that it's possible because some have access to really low electricity costs, but at the end of the day, they will have to renew this split, and we keep see expansions on the overall Bitcoin network by the addition of new gigawatt yearly. Yeah, last year we were close to 5.5 or 6 gigawatt added, and in 2024 it was 4.5. So there have been something exponential. It might slow down due to the US slowdown and the pivot to HPC, but in the meantime, we are seeing regions in the world that are much more favorable to Bitcoin mining, to data center than it was in the past. I'm speaking about Kazakhstan. I'm speaking about also in the Middle East, UAE, Oman. Even if they will be actually a threshold in deployable power capacity in those areas, the fact that now we have efficiency that is close to 10 joule per terahash for new machines, obviously, also indicates that this rise in hash rate could be exponential.
And you, in this chart, you also write based on hash cost at 25.2 per petahash, which is equivalent to 19.6 joule per terahash and $55 per megawatt hour. So let's go through these assumptions. So 19.6 joule per terahash, is that the global average of efficiency?
Yeah, that's the average of the average efficiency that I project during 2026. And I've yet to release this research, but I'm also working on the potential efficiency that we could achieve by the end of 2026, which could actually be closer to 19 joule per terahash. But it still have to have time on this because I'm working on several sources that are now existing, which are hash rate index and also Cambridge data regarding the power capacity on the network and also the hash rate, obviously.
Okay, I really look forward to you release that analysis. I'm sure many miners, analysts are looking to get that data of what is the average network efficiency. What about this $55 per megawatt hour? Is that the average operating cost per megawatt hour that you found?
Yeah, indeed. In such case, this is the all-in cost that is a bit more representative because at the end of the day, you pay electricity, but you also have to burn cash for other purposes. And I kind of keep the industry median. Why not higher? Because at the end of the day, if it's higher, maybe miners will have to shut down. And why not lower? Because the tendency to see rising data centers for demand for AI, HPC might actually drive up the prices in the most developed countries and jurisdictions. So I won't take this stance either. So it's a bit of conservativeness, but also there might be a bias that historically we have seen this cost in the network. That's one of the most stable things we have seen in the network compared to the hash price or the hash rate or the Bitcoin price that are being kind of highly volatile and difficult to predict.
Yeah, that's something I also found when I did my research, is that there is kind of a, I would say, if you look on the revenue per megawatt hour of mining, assuming the highest efficiency machines at any given time, it always reaches on the kind of bottom. It goes down to maybe $70 or 65 or something like that, and very rarely lower. So that means that if you have an electricity price below that and you use very efficient machines, you can almost always be sure that you will get through that bear market. So what is the biggest misconception about mining profitability? Because this is a new industry and not everyone are very educated, and there exists some, I would say, narratives that about profitability that are kind of make sense, but when you really start to look into them, they doesn't make sense. So what do you think about that?
I think it's about lacking of first conservativeness in your predictions, in your modeling. And the second thing is about being able to look at the black swans. So about the first thing is when you are modeling, for instance, most of the research content I've seen are predicting 1.5 Zetash on average for the end of next year. I'm not saying they are wrong. Actually, I could be wrong and they could be right. But as a miner, you should always look at worst case scenario and stress test, and then decide to make your investments or not. Because at the end of the day, this industry has remained highly volatile, and aside from volatile, we have seen daunting times, and it remains because now the hash price is below. It's below 40, which is an important threshold for miners profitability, and also because and regarding my second point about black swans is about mining always be exposed to many factors because you have to import electrical equipment, ASICs. So here I'm talking about supply chain that are affecting energization timelines. So meaning the project profitability and sustainability, because if you have advanced some costs and you have interest on the balance sheet and the P&L, it might be an issue. So supply chain bottlenecks are an issue for this timeline. And also supply chains means geopolitics, means tariff exposure. So it's particularly relevant for the US, but we have seen also in some jurisdictions that aside from tariffs, it exists the risk of adverse events regarding the fiscal environment with tax hikes. And aside from just tax hikes, there is also risk that overnight a country decide or a government decide that mining is not VAT eligible industry anymore, and you can have a very important provision and debt on VAT that you have to refund ultimately. And it's happened in Sweden and Norway, if I'm correct. Correct me, Yanni.
Not, it was something other that happened in Norway regarding taxes. Yes, Sweden was a big disaster.
And Finland as well.
Yeah, also happened to some miners
so
there.
It's really about these two things, looking at the black swan. And looking also aside from purely the mining industry or the mining, I would say economics and factors. And the first is about conservativeness.
Yeah, what you mentioned about people sitting on their desk on the computer making Excel models, and then it's very easy to disregard a lot of the real world factors that goes into it. And supply chains, yes, like mining. And if you do analysis from profitability of mining and you just input the like normal economics, for example, a few metrics, let's say hash price, and you expect to deploy within a few days the machines, you don't think you will have any additional cost on the importation or the logistics. And then of course people also forget that the power usage effectiveness of a mining facility is always, I would say, above 1.03 at the very best. So you have to always budget that you need to pay for like minimum 3% more electricity than the nameplate. And on top of that, many miners run a little bit less efficient than the nameplate is saying. You have to budget for that as well. And yeah, then you have to think about the black swans that might happen, like when the government could make an intervention. And so yeah, it's a lot of extra risk and cost in mining that many people disregard when they think about the economics. Yeah, let's talk a bit more about hash rate. So you mentioned you showed how the gross margins will be affected by hash rate developments and Bitcoin price developments. So you sent me another chart which was very interesting. It's basically your hash rate prediction by 2026. So I will share it so those who watch on YouTube can see it. And yeah, Valentin, can you describe this chart also so that people listening can understand it?
Yeah, for sure. So this is your hash rate forecast for the end of 2026, and it starts around I would say 1.030 exahash as of 1st January 2026, and it ends up at 1.7 zeta by the end of December 2026. So a lot of assumption here. The first is that there will be an energization of power capacity that is in between 2020. In line with this, the new capacity will be energized by new miners. So I predicted a 12.5 efficiency for the new miners coming online. You have to fact check with the article that I've published on Hashlabs website, but 15% of the ASICs running on an efficiency equal to or averaging 27.5 joule per terahash will be replaced by new miners, again 12.5. And so all in all, these assumptions leads to the 1.7 zetahash I've shared with you.
And what Bitcoin price assumptions are and transaction fee assumptions are baked into this prediction of 1.7 exahash by end of 2026?
So regarding so it's really important that in this forecast we have two bottom-up approaches that are kind of ignoring the Bitcoin price and that are much more based on what have been the historical growth, ignoring the price, because the supply chain is the supply chain, and it assumes also that miners will always find a way to find new sites with affordable power cost, and also the new machines that are close to 15 joule per terahash are providing very healthy margins. So there is still some room for deploying new data center and during these hash price conditions that are quite low. So those are the first bottom-up approach. The first is regarding the projected power capacity, and the second is about forecasting the public miner share of the hash rate, and assessing their plans, their forecast, and looking at the new share and their future hash rates. What in reverse will be the overall market hash rate. And the last one is much more economic, so top down. And the last one is looking at the Bitcoin price and the profitability. So the assumption that is included here is $55,000 for Bitcoin.
Yeah, okay. So you are, I would say, reasonably bullish for 2026. Historically, Bitcoin price has increased by about 40% per year on average. And of course, in the last few years, the growth rate has declined a little bit. So you expect it to increase by significantly more than the historical average. What is your assumption or what makes you think that Bitcoin will increase so much?
If we look at the previous peak, it was 120,000. And this peak was achieved after a rally from 60 to 120. So I would say that from the previous peak, I'm rather conservative, and know we are also seeing an acceleration regarding institutions. It's really about how fast the things will go regarding banks and other institutions, regarding, for example, the ownership and the portfolio share that could be invested in Bitcoin. And also there is an acceleration of states investing via just a reserve or sovereign wealth funds investing in Bitcoin. The treasury companies also are popping up. There are all of those factors, but obviously This is the overall geopolitics and economics within the world that will conduct the new horizon for Bitcoin price.
Yeah, to be honest, I don't follow the Bitcoin price as that much, but and I don't like to make predictions. But the only thing I can say about the Bitcoin price is that the stock market is kind of highly priced, and yeah, historically the Bitcoin price has been extremely correlated to like tech stocks and this risk on assets essentially. So do you think it will continue to follow them, or could it like break free from these stocks? Like we have seen gold really just keeps going up in this geopolitical uncertain situation. Do you think that something like that could happen with Bitcoin as well?
I will use my joker here, and I will share also that honestly I cannot share a prediction with you because I simply ignore it. I don't have as much cards as that to make a prediction.
Okay, that's fair. So let's look on the chart of the public miner share of the network. Yeah, can you describe this chart? It's extremely interesting, I would say, how it has just gone up over time.
Yeah, just importantly, the first caveat that is disclosed in the article is that some public miners actually have been included in the sample later. I'm referring about Ionic, Congo, and another that I'm currently missing, that are three important miners in terms of hash rate that were included in the sample. So there is a slight jump, for example, from December 2023 to June 2024, going from 31.5 to 36.5 percent of the hash rate network. So that's the public miners share, and that is partially explained by the inclusion of additional miners. But there is still a global trend is that in late 2023, due to the decrease in the Bitcoin price, there has been a kind of a slowdown for these public miner shares, and then a recovery that was actually very impressive because they have gone up from 31.5% from December 2023 to almost 50% in December 2025 at 48.7%. And now my prediction will be that 2025 was kind of a crazy year because we averaged 45% of the hash rate network. But actually, with the pivot of public miners, I would say US miners that are representing much of this hash rate share, the fact that capacity will be removed from the network could actually land to 40% and 37.5% in not in the worst case scenario, but in the best scenario regarding to public hash rate share by the end of 2026.
So can you talk more about that assumption? So it's essentially public miners are investing heavily in transition to AI and HPC. Mining is not so interesting for them anymore. We saw, for example, Bitfarms announcing a couple of months ago that they will completely transition to AI, not focus at all on mining. So yeah, what is going on with the transition to HPC, and how will that overall impact the mining network?
As for the moment, we have 37.5, something like that, percent of the hash rate network that is in US, and maybe most of those private actors that are not public in the mining industry might also try to shift. So overall, this will cause a removal of Bitcoin mining power capacity, a complete removal, even if machines can be sold and so on. There is really a drawdown on the power capacity that is nearing, and as a result, it will impact the public miners' share and decrease this share. Now, what is important to note is that to make this forecast, I've looked actually at what could be the public miners' share given their statements, their announcements, and their predicted hash rate share. And in the meantime, it gives me the ability to look at their pipeline and what is dedicated to Bitcoin what is nodes, or just simply the removal of capacity. For instance, when you look at Core Scientific, I've predicted that many sites would be shut down by Core Scientific and really limited their hash rates by the end of 2026, as they are trying to retrofitting multiple sites for the CoreWeave deal. Yeah, actually, it's really about that. It's really about protecting pipeline in terms of power capacity, hash rates, and then looking at what could be the share in this scenario.
And are there any public miners right now who are like heavily expanding their mining capacity at all?
I just really think about it. The one that I'm really curious about its plan and its end of year public financial statement release is Mara, because Mara initially had the target at 75 exahash by the end of 2025, but they stopped reporting hash rates. So it will be very interesting to see if they have hit their target or not. So Soluna as well, important plans, hosting plans, so new hash rate as well, and a bit of AI, but it remains a residual share for now. But when you are looking at the overall public miner forecast, everyone is talking about HPC AI removal, or just stopping expansions. When you look at Congo, there was 100 or 75 targets, and no investor presentation, they have just removed this prediction and just claimed that they have indeed 50 exahash and no further plan regarding hash rate expansion. You talk about Bitfarms. Iron will also likely remove some hash rate capacity. TerraWolf has disclosed that there will be only a residual share representing about 1 megawatt of Bitcoin mining power capacity at its New York data center. And I could actually expand on many miners. We have talked about Core Scientific. BitDeer is also kind of testing the market and will conduct diligence at these sites to know if they can be, maybe their Ohio sites will be, Norway as well. And also it will be particularly interesting for them to shift some data centers in less favorable jurisdictions, such as Norway, for instance, in tidal, where Norway has been kind of, I would say, aggressive toward the industry.
Yeah. So this is very interesting information what you share here, because I remember in like 2021, public miners were so aggressively expanding, their shares went up by 2 digits just by announcing a purchase of new machines. Investors were super excited about expanding Bitcoin mining because mining margins were enormous after China banned mining and Bitcoin price went to 69K. But of course, over 2022, 2023, the bear market really kicked in, but they didn't have any other alternative than to keep growing, in the mining hash rate. But now we're seeing this AI boom is really means that they will just not expand anymore. Even Riot, who had this enormous site, is going to converge it to AI, it seems like. Yeah, and also one other question I had, which I've been wondering a bit about, because I'm wondering what will be the end state of these public mining companies. And some people say that, yeah, they will continue to do mining and HPC, so they will kind of use as a holistic data center strategy. They will use mining as one tool and then AI as different tools. They could use mining to get access to powered land, to secure that land, monetize the power, and then convert the site over to AI. But I don't know if that's really a realistic long-term strategy, because first of all, AI sites can handle much higher power prices than mining. So it's more about just getting access to this very high uptime sites and with enormous amounts of power than getting access to the cheapest possible power, which is the point of mining. And on top of that, since mining is such a ruthlessly competitive industry where you see competition around the whole world, you have miners in obscure countries that most people never even heard about who can get power for like 1 or 2 cents per kilowatt hour and pay someone like a couple of $100 a month to work on the site. So that's the competitive level, and my point is that you can't treat mining as kind of a part-time gig. It's a full-time job, and if you're not full-time doing it, then you will completely lose in the global competition. I personally don't really think that mining and AI goes so much hand in hand as some of these public miners have been saying. And therefore, I think most of them will completely transition to AI and leave mining completely behind. I think Bitfarms realized this and they made a very bold move and just, no, we will not do mining anymore. We will fully focus on AI. So what do you think about that?
I will be short. Let's be honest, it's only about narrative. That's why, in my opinion, they are claiming that. Yeah, for me, the truth is Bitcoin mining will only remain in data centers when it's simply not eligible for AI. That's it. Otherwise, it will be flocked with AI HPC capacities.
Yeah, that makes sense. Yeah, we've seen these public miners being extremely narrative driven, jumping from one thing to the next very fast. All about pleasing investors, essentially, what they want to hear. Yeah, that's good point. But what will then happen with the US the US share of global Bitcoin mining if all of these public miners convert to AI?
Indeed, that's a great question. Inevitably, it can lose dominance. I don't think that Russia or China can take the lead because at the end of the day, maybe some data centers, not, I don't know if it's in Russia or in China, it's possible to have such infrastructure on mining data center, but we'll also try to shift to HPC. But yeah, it can lose actually dominance. Still, there will always be a room for behind the emitter power capacity from mining connecting to wind solar farms that are not offering a good uptime and that are just not eligible for HPC.
Yeah, we have a lot of sites that are not eligible for HPC, even some large sites. So I personally know about one site in Norway that were not eligible for AI, even though it was very big. And you would think Norway has an extremely stable grid that can be used for AI, but for some reason it could not be used for AI. So yeah, who will be the biggest new investors in mining capacity? Do you think governments will start mining, or like players tied to the governments around the world?
So yeah, if Bitcoin recovers in terms of price and there is a bit of political shift, in this case, yes. But I do think that at the moment in 2026, we will see passive investments from governments into mining capacities.
Yeah, and we published an article yesterday on the Hashlabs blog. It's about how mining will become a national strategic sector. And I do agree with you in that governments will start to take a more active role in the Bitcoin mining industry in the future. I'm just not sure if they will mine themselves or if they will just find other ways to control miners as best as they can. You know, similar to how they control the electricity generation plants by just mandating them to sell the power in a certain way or controlling the fuel prices, you know. But they just let the power plants still operate themselves. They just control the few choke points. So it will be very interesting to see. Like the governments will for sure be involved in mining in some way. And it's just difficult to say if they will mine or if they will just try to control it in a different way. So yeah, what do you think is kind of serious operators in mining? What should they prepare for?
So what is the biggest risk that is nearing into the space?
Yeah, like what is coming for miners now? What is the most important things to prepare for?
Actually, it's a great question. I don't know if there is a thing that they should prepare for, but maybe what is nearing is this evidence or this requirement to actually isolate and exit the grids in most countries to take off-grid solution. And also a big take is to see if finally stranded gas reuse can be a viable option on large-scale industrial installation. That will be a very, very interesting topic to monitor over the year.
Yeah, that's completely true. Trying to essentially move off the electric grid and being more creative on how to get like secure long-term access to very cheap power. One problem with like stranded gas is really great. You can get it at a very low price, but it's kind of inaccessible to many miners from what I've seen, because miners don't know how to generate power. But of course that is something that can be done, but it's bigger hassle than just plugging into the electric grid. And I would say in the Nordic countries, if you operate there, like whole northern hemisphere, there are potential for using heat, and that could allow you to be connected to the electric grid and mine there and just find someone to buy the heat, and then you can monetize that electricity 2 times, one by selling the heat and the other by mining Bitcoin. So that can make you much more competitive. So you're tracking a lot of metrics, and I've seen your database. It's quite extreme. If I know most people don't take their time to track all of these metrics and collect all that data, but if there is only one metric that people should look at in mining, what is that?
The geo, I would say a geo. So this is my wild card. It's the hash price, hash cost combination. That's it.
Hash price and hash cost combination. So can you elaborate a bit more? I know probably most listeners know what is the hash price, but hash cost is something strange for many people.
Yeah. So hash price is your revenue per hashes, so the revenue you get from the miners. But yes, hash price is only relevant if you take it into perspective, meaning if your hash price is sufficient to cover your cost, and your cost can be harmonized and compared using a hash cost, which is simply the cost divided by your own hash rate assets. And so looking at that, you can capture the margin, but aside from the margin, you can project margin scenario given a change in hash price, which is not into your hands, and given a change in hash cost, in which you might have a bit more control or might have a greater perspective regarding if you are exposed or not to fixed rates, power rates, and other potential factors.
So do you recommend people to, instead of calculating the cost per Bitcoin, to calculate the hash cost and only use that?
Yeah. Even if it's kind of, I won't say the same analysis, but it's close. Looking at the hash cost actually enabled to have a much better understanding of how things would evolve. Yeah, that's it.
Yeah, because essentially mining is impacted, or the mining economics are impacted by many factors and not only the Bitcoin price. That's kind of, and also if you use the cost to mine 1 Bitcoin and you have like 1 gigawatt of capacity, but you only mine, like your cost of mining Bitcoin might be only like $30,000 if you have very low power price. But if your uptime is very bad and you only mine 1 Bitcoin per year with that 1 gigawatt, it's looking like you have a very, very low cost of producing 1 Bitcoin, but you only produced 1 Bitcoin, you know. So does hash costs prevent that kind of bias in the analysis?
Yeah, I would say so, because you are much more aware of all the factors that could impact your cost to mine, and in the meantime the revenue. But I would say that much people are already aware of just the Bitcoin price and the revenue for it. But yeah, it's really about how this hash cost perspective would enable you to master much more variables that are actually impacting your cost to mine.
Do you think that the industry will move towards using hash cost as a standard metric?
I think it's already the case. It's more about how the data is shared and how the retail or how the investors are looking at metrics within this industry. That's more about how widespread this metric should be rather than how companies are using it.
Okay, so for all listeners here, go and learn about hash cost. It's going to be an important metric, and if you don't use it already, you should also learn about hash price. That's also a very, very important metric. Valentin, do you have any closing thoughts on this podcast?
I would just say that it will be interesting to see if miners can also become, I would say, proxy energy companies, meaning that they acquire the skill to develop small power plants in some jurisdictions, just for instance, building a dam or not substantial projects such as large dams, wind farms, or nuclear power plants, obviously, but yeah, or they are able to deploy small generators, and if it's the future of mining.
Yeah, that is very good thoughts, and it also based on the conversation also we had about AI. Do you think that maybe if we can break it down very simply, future of mining is close collaboration with the energy producers and particularly the build out of the generation infrastructure, and then the AI is kind of more upstream, or I mean more downstream on the grid, and just focusing on the usage of the electricity.
I will answer by a question. Are energy companies the new miners in 15 years?
Yeah, that's a good question, and I guess we will see. But a lot's indicating that it could be. Okay, Valentin, where can people find you if they want to find you?
On LinkedIn, so Valentin Rousseau, and you can also find me on X looking at Muad'Dib underscore Pil, Muad'Dib like the Nobel Dune.
Okay, yeah, I personally really recommend everyone to follow Valentin. He is posting a lot of great research. So, Valentin, thank you very much for joining the podcast.
Thanks, Yara.